All right. So I know I said on my Twitter I was gonna make a short video, like an intro, and then an advance, but no, I'm just gonna make a long video over the tool that I made, the volume tape, and as y'all can see right here, dude, a lot of people have been buying it. Like the volume table is not, it's pretty much the table. I should change it to the tape, but as y'all can see, like it's like over 1,900 people saw it. And this is the second time that I put this tool on TradingView because the first time it got hidden because I didn't follow like the house rules. But since it was my first time, they pretty much told me what I had to do, so I just fixed it. So on the volume table, even right here, it just shows you like what it does. So read this first, but also too, why do you think I made this? I want y'all to actually sit there and ask yourself, what is the most important thing about the tape? Like, why is volume so important? Because you got to think about it. When you first started trading, right? Even for me, when I first started trading, I did penny stocks, right? I started with pennies, then with options and stocks, and now I'm like options and futures. But anyways, when I first started trading, and this would piss me off, a lot of big traders, they didn't know what volume was. Like back in 2018, when I first like the people who I thought were like actually traders, they just had a lot of money. They would always be like, volume is nice today. We have some good volume, but like, what does volume actually mean? They couldn't tell you that. They just be like, oh, massive volume coming in. But you don't know if that's buy volume, sell volume. Like if you don't know what the volume is telling you, then why are you hopping in that trade? Because just because you see a massive volume come in on a stick, it could just be a fake out. They could be selling on that green candle or buying on that red candle. Like, do you see what I mean? But why do you think I made this tool? Because I wanted to see the volume bars in a different format. That's why I made like the volume table. So that way I can see the I can see the current volume, of the time frame that I'm watching. And I have two other time frames, where like higher time frames where I can see that volume. Number two, I can see the past data of the volume from the last nine candles on top of the average volume on that current time frame. And even right here, number three, well, this should be number one. Wyckoff and Gann, whatever his name again, they both talked about the tape. And Wyckoff's book, I think it's called The Secret. Let me look up the title. So his book is called the Day Trader's Bible. So these three pages came from the Day Trader's Bible. This one right here, the last one came from Gann's book, Truth of the Stock Tape, right? I read this book before. I've read Wyckoff stuff before, but I knew what the tape was, because Trading View doesn't really have a tape. If you want to like actually see the tape, you need like see error charts and jigsaw and all that. I'm a volume trader, right? Wyckoff is based off volume, right? Again, he based his trading off of space time, advanced mathematics, all that. Like but he used volume too. He just didn't use it as like as much as Wyckoff did, right? I'm a volume trader first. I'm a volume trader, and I just combine like again elements into my trading whenever I can. I don't force it. But anyways, Wyckoff, these 4 pages. I want you to pause this video, read each page because everyone is important. Probably read this one first. What if no? Yes, read the third one. I should have put them in order. So actually read these two first. There we go. Gotta make this one smaller. Make this. There we go. Here. And if you can't see this, then I don't know. You need glasses or something. And I know it's bright. I know it's bright. So don't be like, oh, my eye. I know. Okay, but Wyckoff, you talk about the tape. Like the tape, it just tells you how price is running, right? Like like even here, you're not reading the news. and then buying or selling if the stock acts right. Like even he knew. That's why I try to tell y'all news does not matter because it's already priced in. But people want to argue with me. Like news does matter. No, it doesn't matter. If you look at the price action tape will always tell you before news because it's just data. It's just numbers. It's numbers. That's all it is. The tape is just giving you numbers, and you have to use those numbers to form a plan of action. That's all the tape is doing. That's all it's telling you. And people think you got to use like some advanced math. Like, no, you're just tape reading. Like, it's common, even here. Tape reading is rapid fire common sense. It's object to determine whether stocks are being, if they are in a accumulation phase, buying, or if they are in a distribution phase, mark up or down, or whether they are being neglected by the large investors. And by that means, if they are being neglected by the large investors, it just means the retail people are trading and the large investors they are in the market. So that's why on certain days, the market won't move, right? Because it's low volume. Like all the big whales, they are in the market. And even right here, right? It's a mental mind game. Like that's all it is. But a tape shows you who is in control. Because you gotta realize if you are a well, if you are a bank, your goal is to sneak in orders, right? If you buy a ton of if a bank put $1 billion, let's say in like Tesla or something, right? Just if they just want a full market order with $1 billion, that's gonna show up on a tape. That's gonna show up as a big candle, and a lot of people are gonna see that. They don't like to do that. When prices in a downtrend, they like to buy like spikes at a time, spikes at a time, spikes at a time until price comes to like a level of demand, and then that's when you start to see the massive volume coming because they they trap all the breakout traders. They run the stop loss of people who went long on the first bounce, and then they push to the upside, right? And then break the minor break of structure, and they stop out those shorts, right? And since those shorts are since they are in drawdown, they have no choice but to sell. And then the banks buy what they sell, and that's when you see price keep going up because those shorts have to cover. And the tape shows you that. The tape shows you when they're buying and selling. And I made it in a way to where on my volume table, it has if a candlestick has 2 times more volume, it'll highlight gold and it'll show you. But pretty much those markets, right? That's what I'm saying. Like people think the Trump market is bad, it's terrible. People don't like sideways action. People want instant gratification. And some of you watching this video are the same way. Y'all want instant gratification when it comes to the market because you're not used you're not used to not you're not used to things not going your way. So you let your ego and pride get in the way when it comes to the market, and then you wonder why you lose because you're letting your pride and ego get in the way instead of like sitting back and reflecting, like, okay, if I just be a little more patient and actually read the data that I'm giving in real time, at this current day of time, maybe I can come up with a plan of action. That's how you got to think. But a lot of y'all just want, I want this to go up now. I want this to go up. I want it to drop now. Like y'all are like Caillou, impatient. I don't know if y'all seen that show Caillou, that spoiled brat. If he didn't get his way, he started to cry. That was one of my favorite shows growing up. But looking back, he really that he needed a whooping. That man, like, bro, Caillou was so spoiled. But anyways, uh yeah, gold markets are your friends because that if a market's trading sideways, that's when you want to really look, and that's when you can catch the moves. Because what happens when the market trades sideways, right? People be like, okay, I'm out of here, yada yada yada. I'm not gonna watch the market, and then an hour or two later, what happens? You see that one big candle, and that one big candle, since you miss, that breakout, you're gonna want to chase. Hence FOMO. Anyways, enough yapping. This is pretty much what y'all pause this video, read these 4 pages, and then I'm gonna show y'all the tape. Okay, so the volume tape I made, I'm gonna get rid of the time tape because we're just gonna talk about this table. and I'll put it in the middle. So let's say, well, if I want my settings on a dark, so my screen's black. So if I want my settings, I have mine to the bottom right. So this one you can move to the bottom right, but the time clock can anyways. I have mine to the bottom right of my screen because it's next to like the real time volume. And then so your lower time frames don't work on time frame two or time frame three. I've got to tell you all that. So keep this on two time frames. Like just keep time frame two and three on a higher time frame. Like so, let's say, like I said, once you chart everything, you pretty much go to the lower time frame to find an entry. So whatever lower time frame you go to, that is your slot one, for example. And your slot one, it changes. So like if I go to the 15-minute time frame, oh, this saved here. All right, I gotta get rid of this. But when I go to the 15-minute time frame, you see how this first slot changed to the 15, and it shows you which time frame you're on at the top left, the first blue corner, right? The 15, right? Go to 30, right? If I go to the hour, right? But if I were to put like the 1 minute in slot two, it'll look like this. Then if I go to the 1 minute, oh no, so it does work. Okay, so I guess you can put it in a second slot. I just know like some days. I just know yesterday when I did it, it was like a glitch. But anyways, if you do put it in a second slot or third slot, your lower time frame, then make sure you go to that actual time frame and see if it matches. If it doesn't match, then change it, right? But my thing is the thing is with Wyckoff and Gann, when they looked at the tape, they would pretty much go to the lowest time frame that they can. Because you got to realize, if you're gonna sneak in orders, you're not gonna sneak in orders on a 30-minute chart because that's a big candle. You're not gonna sneak in orders on a 1 hour chart. Why? Because it's a big candle. They're gonna sneak in orders on the 1 minute chart and below. Because why? Because these are small candles. Every candle is only open for a minute. For a minute. So my first chart's gonna be the 1 minute. Cause I'm gonna go over this trade I took using the volume wheel and usually what I know. Then my second time frame is the 30-minute or the hour. It's really up to you, but I usually do the hour and 4 hour. But like I said, it's up to you, and you can change these. So the average, right? The 20 is just it takes the average 20 candles, and that's how it comes up with average. And I think this you can change as well with an abnormal volume multiplier. If a candle has two times more, I think the average volume, it'll flip. It'll highlight gold. So when it highlights gold, it's telling you, hey, a lot of volume has came in on this candle. You're like, you need to watch it. Let's see what's going on. And the number of slots, I think you have up to, I think there's nine. No, I don't know how much you can have up to. Shoot, I didn't realize. I thought the limit was nine. So I guess you can have up to, oh, so the 20, which ain't bad, but like I said, you don't want to like put too much pressure in your mind, right? Because I just need nine. I just need nine and 10. Then bullets, like I said, everything you can change. But the most important thing, like to if you really want to get this tool down, is like keep one slot on the 1 minute time frame because that's where they like highlight this order. Because all it does, like I said, these last nine volume candles right here, these last nine candles are what I'm seeing on chart. So this now candle is the current candle. The negative one, two, three is the past three candles. Do you see what I mean? So it's showing you the data of the last nine candles, right? I'm sorry, hold on. My dog at the door. Come on, you're here. Come on. Yeah, this is gonna be a long video because it's very like it's a lot of if like when it comes to the tape, I can't just be like you just like do this and this and you're gonna like no like this is like detailed because like if you actually want to and this is like a real tape because I know the real tape has the bid and ask the price, but this tape is just a volume tape. It just takes the volume bars and it puts it in a data sheet, in a data sheet. in a timesheet, whatever it's called, time spread, whatever you want to call it. But it puts it in numbers for you, so that way you can see. And the green arrow, I mean, so the up and the green, it just means the open. It just means uh we close above the open, hence a green candle. The red means, the open, the close. I forgot the saying. Anyways, the red means we close lower. The pretty much the green means the candle closed bullish, and the red means the candle closed bearish. And I think a green candle means the we close above the open. A red candle means the open we the close didn't close up. It's something like that, bro. I don't know the exact saying, but just know the red means uh bearish close, the green means a bullish close, right? But I don't really care about the red or green. I just care about how much volume these candles has, and I look at this volume and I compare it to the last three. Just based off the setup. So even right here on the trader, I'm just gonna show y'all what I mean. So even right here, so this trade I took on yesterday, and I took a long and a short. Like, so I did this all in a 1 minute time frame. So I'm gonna show you what I did. The low for Asia is right here, right? So usually if we are close to Asia, more than likely or not, we're gonna break under Asia and pop back up and go to upside. 9 times out of 10. Number two, we had a low right here. Number three, I don't look for my entries until 9. I don't trade the first 30 minutes. Like I said, when you are using this tool, don't get fooled. Like I said, don't trade the first 30 minutes on the market unless you scalp. That's different. A scalper means you are in and out in one candle. That is a scalper. You are in and out in one candle. But if you are a day trader like me, like you don't need to trade the first 30 minutes. Wait till 9:30 or 10 and then look for entry. So I saw this massive sell pressure, right? And I was bullish. Why? Because the low of Asia was right here, and in order to go up, you need to go down. So I'm just gonna play this out. So we broke this low, right? Look at this volume right here. 11K volume on this candle. And do you see what I mean? This will show you, this will tell you like, hey, there's volume here. And like 9 o'clock is when we get the next 4 hour candle. And not only that, but also if you combine this with the volume clock, no, with the time clock, yeah. So if you combine this with the time clock, pretty much at 9 o'clock, that 4 hour candle flips. But usually I got in before my time frame started to sync because the 1 hour and 30 minute were in sync, and then after this 15 minute candle closes, the 15, 30, and 1 hour they're all in sync. But if we look to the right to the volume wheel, right? I saw this massive red candle. We swept Asian lows. So I got in down here. I got in on this red candle. Because in order to go up, because before an up move, there's always a last red candle before price goes to the upside. In a downtrend, like in a dump, there will always be one last green candle before price dumps. And you see right here, this last green candle, then what happened? We dumped. And then watch this. Boom. This should have told you that we had buyers here. We swept under the low of Asia. We swept under this first low. And what did we do? We popped back up. Not only did we pop back up, but we closed above. But this candle at 9 a.m., number one, so this candle right here at 850, this candle had 9.55K volume on it, right? This candle right here had 11K volume on it. This candle is smaller than the candle at 850. That's number one. That's the first clue. Number two, this candle had more volume on it. So if this candle had more volume on it, how come the size of the candle is not bigger? How come we closed above the Asia low and not under it? Had we closed under this low, then maybe price would have still fell. But we closed above it. This next candle, what happened? It engulfed this candle. And this is a big candle for the 1 minute time frame. So this is telling you, hey, someone bought here. Number two, the volume was telling you. We had the last third candle, it was only 7.3K. This fourth candle was only 4K, right? So so they were buying on this down, they were buying. And then this random 11K volume out of nowhere, it just comes in out of nowhere. Like that is telling you, hey, someone is buying this. So let's keep going. Cause I got in right there. I got in at that low. And then what happened? And then you see as time goes on, you get a new batch. But like I said, you can change this up to the max of the 20 if you really wanted to number slots. So that way, it can still be there. But like I said, you don't want to have too much, you don't want to have like too much data, and start to overthink. But I usually just have nine because I see it once and I can like plan it out. So let's keep watching. So that's over our low. And I knew right here, not only that, but I drew a trend line right here because I'm like, we have a ton of stop orders right here because these wicks, right? We have a ton of orders. And then this candle right here, this red candle started the range, right? It started the range. And like I've told you, if price starts the range, you want to watch. So we were in a range, then we broke out the range, right? And these green candles are bigger than these red sticks, right? So this candle has 3.K, this candle had 4.4, this candle had 5K volume on it. So they were trying to sell this. So when price broke up here, people were trying to sell this thing because you gotta realize you see all these red sticks right here. Price needs to go back and fill this void, at least half of it. So people assumed, retail traders saw all these red volume sticks and assumed, okay, we should tank. We should tank. So every red candle got ate up. Every single red candle got ate up by a bull candle. So what does that imply? They kept having to cover and cover and cover. And this was a slow grind up. Because I knew it could fall down more. Because I'm not gonna ignore this sell-off. But I knew price had to retrace. I knew they were buying here because this is the range. If I were to draw a box right here, like isn't this not a range? And then watch. So I'm still in this trade. I'm still in this trade. I'm still in this trade because I got in down here. This right here, a lot of people would have sold this. A lot of people would have sold this candle right here. Because why? Because it just top and then you just see this big drop, right? But I knew since we broke up this overall range, right? We are just retesting. They just pretty much the LPS and then whack off. So this is a type one whack off. So we have these three drives to the downside. This last drive right here is a spring because we have this giant sell candle followed by this impulsive buy candle. Because all these green candles make it one candle. If I go up to the 15-minute time frame, you can see it better, right? This giant impulsive candle. But like I said, I did this on a 1 minute time frame. I did this all on a 1 minute time frame. So a lot of people would have sold right here. I didn't sell right here because I'm like, we just broke above this trend line. Number one, zooming out. If we zoom out, we swept the low of Asia, and we also swept this low. So why would price come back down here if we already swept out two lows and run stops to the downside? So what is price going to do? We're going to run stops to the upside because all these candles right here, all these wicks, you have stops over every single one. And the market knows that because people are still trying to short this junk when it's not ready. So all these are stop loss or every single high had a stop loss order. The overall high was my target, but if price looks like that is selling off, I'm not gonna, I'm gonna take my money and dip. So watch this. We had this massive setup candle, right? Knowing this candle had 11K volume down here, I know they were buying, right? So price is chilling upside. This is a fake out. When when shorts saw this candle, they wanted to hop in, and I'm gonna show you what happened. And this is a broadening formation as well, which I saw also because from like here to here, like look, it's just a broadening formation, and I know if you trade the strat, a lot of strat people use the broadening formation. But watch this candle, boom! You see the 13K volume. Do you see what I mean? And this did the same as down here. It's just in reverse, right? This red candle had a little volume, but this green candle had a lot of volume on it. And this candle went up to here, but it wicked it, ran stops. So if you went short right here, you already got stopped out. If you went short on this candle, what happened? You are in a hole. You are in a hole, right? And this shows you, hey, like someone is still, we have a big buyer. And this came in at 925. Right? This red candle had 6.8K volume. This green candle had 13K volume. This red candle down here had 11K volume. Do you see what I mean? And then this hour shows you the last hour candle had 1.84K volume on it. If I go to the hour time frame, this now candle has 126K. This last candle had 184K volume. And it closed above this wick. It closed above this wick. It swept the lows, but it closed above. And this next hour candle, it opened at the same closing price, just about 6639.5 to closing. We opened at 6639.50. Yes, yes. So this did open at the same price. This opened. This candle opened at the last candle's closing price. So that's what I mean. Like the open and close matters. That's why on the time frame clock, I got rid of the high and low because you don't need the high and low. All you need to focus on is the open and close. Where the price open and where the price close at. And I know the 4 hour time frame on ES and stuff, it's glitched out. I don't know. Like I said, you have to find the minutes. But like on SPY and all that on the stocks, the 4 hour time frame is the same. Anyways, I'm gonna keep going. Like I said, I don't expect a lot of people to watch this video. Like it's only for the few who actually want to learn like the tape. But in order for you to get better at the tape, you need to see it in real time. Like no matter how much I tell you, no matter how much you watch this video, you actually need to sit down and watch this thing in real time and combine it with the actual volume bars at the bottom and a time sync. When 3 to 4 time frames, open and close. That's how you know if the move is actually legit or not. But you see, all we're doing is just running these stops. That's why they sent out this wick to run these 4 stops. And then watch. I'm gonna keep watching. Boom. Throw that wick. And I sold right around 666 because that's the mark of the beast, right? And number two, if I zoomed out, this low key looked like a wedge. And then I knew that I knew that there were bears still here somewhere, but all we were doing was just running stops. And I was still in it because this is a slow grind up. Had this been a fast grind up, I would have been got out. But since this was a slow grind up, all they were doing this whole time, they were just trapping longs and shorts. But I saw this and I got down here. But if we were buying like this Browning formation, like you got trapped. Like if you bought this green candle right here, this red candle stopped you out. Right. If you went short down here, if you went short at the top at 923, this green candle stops you out. So they were running both sides. Like they don't make it easy. But if you can spot when they are buying, you can get in when they get in. Our goal is to get in when the banks get in. We don't compete with the banks because we don't have enough money. And then I don't know why it's taking a lot of people to get that through their thick skull. Like the president, Trump doesn't matter when it comes to the market. Like news doesn't matter. None of that shit matters. Excuse my language, but none of that shit matters. The only thing that matters is what you see in that chart. It's the data, what you see in a chart, right? And the volume tape shows me when they are buying and when they are selling. And then watch, I'm gonna keep playing it. And then right now, there's not really a lot of volume coming. They're just chilling. So I think, yeah. So I sold them right here at this top. I pretty much sold at 666, and I caught from here because I got it right here. So from here to here, I caught like 34 points, and that's a good move on. Yeah, so I caught. So I pretty much sold up here, and then too, I guess if we trade ICT, there's a fair value gap over here. And you see I wicked it. So yeah, so I guess you could use that too. And I did this all in 1 minute. So then this happened and I sold. So I sold, right? And I went short right here. Now, why did I go short? Because we started to hit this, right? And we started to turn. And mind you, this is still bearish. This is still like a lot of bearish pressure, right? All this selling, this sell-off was made by Will. Right. So we were buying, so we stopped out longs and we just stopped out shorts. That's why people like I know there are people on Twitter they're trading. It's like, oh, this is so choppy. Yes, it's choppy because they are running both sides, and the tape shows you. But this shows you like we are still in the up, like we this sideways action right here, this type one accumulation showed you like, hey, someone is buying down here, right? And then we broke above this, and we were just ranging, right? And we just stopped at both sides, but we were grinding up slow to stop out to stop out these shorts. Because like I said, above every wick, there's a stop loss. There's a stop loss above every wick. So knowing all these candles right here, do you know how many stops were up here? A lot. Do you know how much money they took? A lot. And then I went short because the moment I saw this right here, because this candle had like 5.1K. But I went short during the break of this green candle. And then watch, this junk came back down and I sold. I sold this because my first target, because I'm like, if we're gonna, because you gotta realize, because you know how I said before, like I was cautious because because we could go to the downside. Because when in doubt, you always want to zoom out too, like always zoom out. Because when I zoomed out, okay, I'm gonna get rid of this trend lines, so I'll show you what I mean. But when I zoomed out, right, and I just saw us retracing because I knew this was a retracement to the upside. Because a retracement to the upside, it's choppy. Like yeah, price comes down, they start buying, and then we go to the upside. Like so, and knowing that we had all these red candles down here, right? Price has to retrace, and that's why they ran stops. And then if you draw a fib, right, once we broke under the 50%, it just tanked. And I didn't even have a fib on. I just knew because of the volume right here. This volume on this stick had 5K volume right here, 3.K, right? So we had massive selling pressure right here. But I got in right here at a break of this green stick because we closed under this, right? We had a spinning top and then price closed. And not only that, but price started to it started to make a bowl shape, that bowl shape, that U, that upside down U or V, whatever you want to call it. So I got in right here and I did this all on a 1 minute time frame. So my risk to reward, you got to realize I'm only risking like 2 ticks to 3 ticks. And my target was this low down here because this was an overall low where a well or someone bought in at. And like I said, the market likes to target highs and lows because why? Because there are stop losses, right? So 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 price price retraced to the upside, right? We ran stops to these highs. So if we traded this, like this is choppy. If you didn't get in down here at a clean price action entry, this is choppiness. This unless you went to a higher time frame, but this is pretty chopped. You came is in this fair value gap, right? And what happened? We started to turn sideways. This is the last green candle for this impulse to buy. And then notice something too. This green stick, do you see the volume on the stick? The volume is 2.29K. Not a lot of volume. This spinning top had a 1.25K volume on it. All right. Next stop, next candle. Same close at the same time price to open. All right. 2.2. This next candle confirmed. This candle had 3.25K volume on it. But what happened? You can say the body is small, but it closed under this green candle. So pretty much it omits and it broke that bullish structure. And since it broke that bullish structure that we had to the upside, this retracement, we have no choice but to do what? But to go back and check out these lows of these longs. So I sold up here because my overall target was this high. But if I can't get to this high and the price starts to trend, and if price starts to turn the other way, I'm gonna sell and take my profit because I'm not dumb. I'm not gonna hold hope and pray. I'm gonna take my profit, and maybe trade the other side. And I knew we were coming in this zone because all these are bearish candles. Like there's no buying here. This is selling. So we are coming in a massive sell zone, right? A massive, massive sell zone. So knowing that too, and then knowing that we closed on it here, I went short. And my first target, I have my targets. My targets are the lows. So we have a low right here. There are stop losses because bulls went long here and bulls went long here at the very bottom. So my target was down here. And the moment we broke under this low, I sold. And you make more money on the downside than you do on the upside. Because I caught over like this on my Apex account. This was like 115 ticks. Well, that's what it told me because I guess every cent moves like a tick or something. Anyways, on Trader, I caught a letter like 30. I caught a letter 41 points, right? And I sold. So, and I knew today that since it's Wednesday, they like to play with both sides. You notice on certain days of the week, they play both sides of the market. They go up, down, up, down. No, it's sideways. Like so, this was a truly sideways day, and I knew that from the start. I knew that we are going to go up here, run these stops, because the volume showed me where to buy, and then once we hit a certain level, we are just going to come down. And you notice the volume came in at 10:07 was your first sign of volume. Like, hey, this is selling pressure. Why? Because look at the stick, big bearish stick. 5.5K volume. This next stick, 1008, 3.59. But do you see how close? This is pretty much, it's not a great, this is a inverted hammer, right? This stick had 3.59K volume on it, but it closed down here. So bulls were trying to bring it back up, but shorts were too strong, and that's why I closed. And this next candle, it confirmed this bear flag. What happened? Moment we broke under this candle, we just tanked. And then too, like I said, there you could have went short here too. And took it to this low. And then once price broke under this low, like the moment I saw this green candle, I got out. And I took a long trade from here, from this low up to here, and I took a short. So yes, you can trade both sides of the market. And I did this just with the volume tool. I did it. I didn't even use the time. Like all the time is telling me, the time just telling me when do they sink. And the only thing I do on the timing tool, so let's say if a higher time frame is about to close and open, I mark out that open of that 4 hour or that 3 hour time frame. And the 3 hour time frame, it opened at 6660, right? It opened at 6660. So I pretty much had that level marked out. Because I knew like that was the overall level. Like so pretty much 6660 and 6666. Cause 6666, that's the devil's number. That's the mark of the beast, and that's the key level. Like, and I knew, and you have to know these whole numbers and these angel numbers. They act like magnets to price. So since we cannot hold 6666, we went the other way and we ran these stops to the downside. And then what happened? Shorts, you saw this big candle right here. What happened? You got trapped. We had a small candle and then volume came in again. And then what did it do? Went back up. And I saw this long too, and I could have went long, but I didn't, like I said, I don't like to overtrade that much. It's because I would have chilling. But I did go short again. It was right here. I caught this short. It's only like 20 points, whatever, 21. And I caught this short because we came back in this sell-off zone, like right here. So I saw this and I saw this stick right here, and there's low volume too. So I'm like, if there's no volume coming in, like all price is gonna do, especially if we come to a high volume area, and if there's no like like pressure, then all price is gonna do it's just gonna follow that trend until volume comes in. So I sold right here, and then after that I try to quadruple dip, and I think I lost like $40, and then after that I was just done for the day because all I did they just chopped price because I knew it was gonna come down again, but I was just done because all they're doing, you see how it's choppy. They were trading both sides. And the only reason I only saw this on the 1 minute time frame. And they were pretty much running both sides of the market today. And look, like it came back up, stopped out these highs. And look, head and shoulders, and then this dump. Because I wanted to catch this dump, but I saw this too. It's like, nah. But even this told you, like, hey, like this candle here had a lot of volume on it. But like I said, you need to, yeah, this candle had 8.5K volume right here, third candle. But you see, and like I said, it was just being chopped like this. Like today, I was only able to get any trades on the 1 minute time frame. Had I used like the higher time frames, I wouldn't have caught these. But do you see what I mean? I'm combining my time flips, when they all flip at a certain time. But before that, I'm pretty much looking at the volume first. Because the volume will always, for me, it will always confirm. Especially since I know what a type 1 and type 2 uh, accumulation setup looks like. I just need to see the volume data, in the actual table. So be like, okay, this candle had this much volume compared to the last three candles. This red candle had a lot of volume on it, and this next candle closed green above it. They're buying. Like I'm just using logic. I'm just using logic. Like I don't want to have my mouse over the candle and I have to look up to here and be like, okay, this volume is like 11K. Like I don't want to have to go candle by candle when I could just look at the volume in a table. And I feel like when you look at the data in a table setting, it's much easier for your brain to process the data because it's just numbers. It's just numbers. And like I said, this isn't like an actual tape. Like if you want to watch the actual tape, like the DOM tape, then you need like jigsaw and all that. This is just a volume tape. And I made this because I'm a volume based trader, and Wyckoff and Gann use volume. Well, Wyckoff mostly used volume. He studied the tape, but he studied the volume more. And volume always shows you when they are buying, when they are selling, when price is in the uptrend, and when price is in the downtrend. Volume will always confirm the move every single time. Even down here, like I said, this was a fake out. We just ran stops, then price went up here, sold off, and then price told you that hey, we're selling off at 10:07. But there were signs before this. And I'm pretty sure if I go down to like the lower time frames, like the 1 second or the 5 second, there's probably like volume spikes down here. But like I said, I just use the 1 minute time frame because a lot of algos they use the 1 minute or the 30 minute. But the volume will always confirm. Like even at 10:07, this large spike in volume, this next candle try to open green. It tried to negate this volume pressure. But what happened? Close low. Next candle, what happened? It pretty much opened at the high of this candle. Or it pretty much opened at the close, but it opened red. And what happened? The moment it broke this, all the volume came in. Boom. We had the retest, the break, and then we just tanked. And then this candle right here, that's when you gotta know that the moment price is getting closer to the low, you always see a big candle that just come and it flushes out. It was people. So a lot of people who went short down here, what happened? Stopped out up here. So like, and they ran stop, and then like I said, just focus on the market structure. So this bullish candle right here, or even these two wicks right here. If I just get rid of everything, I'll show you what I'm talking about. So these two candles were holding up this price action, this bull shape. And then the moment we broke these wicks down here, we just sold off. But like I said, if you truly want to master this tape, then you actually have to sit down and watch it. And you don't have to watch every single move. Just like I said, put on the volume spread tool, the volume spread for a VSA tool. This tool right here, so that way it highlights the volume bars for you. And then if these are yellow or red, you see it on the tape. But like I said, you want to mark out your levels because the tape means nothing if you don't mark out your levels, like your highs and lows, your levels of support and resistance. If you don't see like the overall structure and the sideways action, like, hey, are we buying here at this level? Are we selling? Are we running stops? Like you have like it's more than just a tape. That's why you have to chart first, and then use a tape to confirm. Because the tape it will always confirm. And volume is the only signal we have that banks can't hide. Banks can't hide their orders with volume. Volume shows all. Volume shows you everything. It's just pressure. Like volume truly shows you who's buying, who's selling, at what price. But I think that's it for me. But like I said, your first your first table is whatever time frame you're on. Your second and third ones you can change to whatever time frame. And then you notice on my time clock too, when it flash like that, it's telling you, hey, these 3 or 4 candles are gonna flip, you know. But yeah, but that's pretty much it. And then if you trade stocks, go so for stocks, put it on 390, and this will help you with SPY, QQQ, and all that, and Tesla and all that. Because right now I'm trading futures. So this 6.5 is for New York session, pretty much. But yeah, but that's it for me. I was just like I know this video was detailed, but I made it long for a reason because I don't want everyone to watch it. Only a few, because I know everyone is not gonna watch it. But the few who do watch it and actually apply what I'm saying and actually like study this tape, like you are gonna trade it better. Especially if you're already good with price action, this tape is gonna help you out because all it does, it just puts these volume bars in a table format. That's all it does. And once you see it in the format and once you have to get used to it, I'm telling you, you will spot when they are buying and when they are selling because volume never lies. All right, that is it for me. I'll see you on the next video.